Oil prices rallied for a third day in a row on Tuesday as threats to global output risk tightening the market just before the OPEC Plus meets later this week to address supply concerns. In Libya, a worsening political crisis may lead to more disruptions to exports, and in Ecuador, anti-government protests are threatening to shut down production completely in the former OPEC member. The prospect of additional supply from two of OPEC's key producers also look limited. French President Emmanuel Macron told his US counterpart Joe Biden that the United Arab Emirates and Saudi Arabia are already pumping almost as much as they can. And that's having an impact on oil prices, as the UAE and Saudi Arabia have been seen as the only two countries in OPEC with spare capacity available to make up for lost Russian supply and weak output from other member nations. For more on this now, let's go to Naeem Aslam, who is Chief Market Analyst at AvaTrade in London. Naeem, many thanks for being with us this morning. First of all, we have seen oil prices go up by essentially more than 50% this year. Now, what impact might the suspension of oil output in Libya and Ecuador have on these prices?
Sure. Thanks for having me. I think the price action is very much already telling us that the reaction in the market is positive as the supply continue to remain under strain because of a number of supply chain issues, and several of them that you've already mentioned. So I think from a trader's perspective, the two things matter: where is demand heading and how supply issues are being dealt with. And currently, both of these two factors are very much under focus in driving the price action.
Right. Now, interesting, because at the same time, leaders of the G7 are discussing a potential price cap on Russian oil that would hit President Vladimir Putin's war chest, while also lowering energy prices and somehow fighting inflation as well in Europe and in the West. What sort of impact might this have?
Like, we've already noted how they have introduced a number of sanctions for the last number of months. And where is the Russian ruble trading? Where is oil price trading? All of those sanctions are already in place. So we know that the path of least resistance under the presence of these sanctions or the potential new sanction is only skewed to the upside. And that is what traders are focused on.
Is there a ceiling to oil prices? Where do you think oil prices are headed in the medium to long term?
Sure, that's an excellent question. I think, in terms of a support, in terms of a critical price level, $100 per barrel remains a very, very important price point for investors and traders, which they are very much focused on. Now, on the top side, we do not think that the prices are going to go and touch the previous highs or even near enough to 150, which many Wall Street banks were talking about. We think that the price consolidation would be more between $110 to $130 per barrel.
Interesting. Naeem Aslam, many thanks for this update.